Part 4A is the general anti-avoidance provision in the income tax legislation. Being a general anti-avoidance provision, Part 4A can potentially apply to a wide variety of transactions. Consequently, it is important to often keep Part 4A in mind when dealing with tax matters. For Part 4A to apply, 3 requirements must be fulfilled. The first is that there is a scheme, as defined in Section 177A of the 1936 income tax legislation. Although the definition is comprehensive, in a nutshell, a scheme is usually a set of steps that can include making plans, entering into agreements and taking actions. For a given set of facts, there is usually more than one way to define a scheme. The second requirement is that there be a tax benefit, as defined in Section 177C of the 1936 income tax legislation. This requires a comparison of what has happened with the scheme with hypothetically what would have happened or what would have been reasonably expected to have happened had the scheme not been entered into. If entering the scheme has in comparison led to lower assessable income, higher deductions, or one of the other tax advantages that fall under the definition of a tax benefit, then this second requirement will be fulfilled. The third requirement is that the scheme has been entered into for the dominant purpose of obtaining a tax benefit. This is often the hardest requirement to prove. In other words, not only does there have to be a scheme, which has led to a tax benefit, but this third requirement means that the main reason the scheme has been entered into is to obtain a tax benefit. Section 177D 2 of the 1936 income tax legislation specifies a number of factors that help to determine whether this third requirement has been fulfilled. However, these factors are vague and not always easy to apply. Keep in mind that due to the general nature of Part 4A, there will be some transactions where one cannot predict with certainty whether a court would rule whether Part 4A applies to that transaction or not. However, a good understanding of Part 4A's requirements and past case law will increase the ability to predict whether Part 4A is likely to apply for any given transaction.